Hey everyone, and welcome back to a quick portfolio update. The couch investing portfolio went down 4% in the past week, whereas the S&P 500 was down 3%. Definitely not a good week in the stock market. Year to date, the portfolio is of course underperforming. It's down 5.65%, whereas the S&P 500 is down 1.73%. Since the start of this portfolio, which is now just over a year old, the portfolio is up 50.63%, whereas the S&P 500 is up 15.94%, so still outperforming the market quite comfortably. Now, as promised last week, we shall start this series now with a meme. So meme number one is, of course, us investors trying to hide our pain. Plus, if you don't know who this man is, well, just ask in the comments. Second of all, a small lesson here. I wish I started earlier. Regret, opportunity, right? Why are we focusing more on regret, even though regret is a smaller part here? Whereas opportunity is what's in front of us, much bigger part, and well, way more interesting to focus on the opportunity ahead than the regret. So everybody does like, oh, I wish I started earlier. Well, you can always start today. Last thing here before we actually start with the video, the time to buy is when there is blood in the street, even if it's your own blood. A comment here by the first Baron Rothschild. And so in today's video, let's talk about how we are going to be millionaires in the next 10 days or so. Well, unfortunately, if you're a billionaire, you probably became a millionaire more recently. So at least there is that. I apologize for that stupid title. It is what it is. But anyways, what are we going to discuss in this video? Some portfolio changes, well, not real changes, just a couple of positions that I've been adding to in the last couple of days. Quick look at what's coming up in the next couple of days. We're at the end of this earnings season. There's still a couple of companies that are yet to report their earnings, so quite interesting. And then I want to touch on some macroeconomic data, the fear in the market and the noise basically. So first up here, what's happening in the next couple of days? Monday, after the market closes, we've got Oracle. So that's a big one on Monday. On Tuesday, I see nothing that really interests me. Wednesday, after the market close, we've got Adobe, UiPath, SentinelOne. I'll probably just touch on Adobe and then UiPath probably Thursday during the live stream. Then on Thursday after the close, Ulta Beauty, probably to give us a bit of a sense of how the consumer is doing, I would say, at the end of this earnings season. Then we've got also DocuSign, and I think that's about it. So a pretty boring week altogether. Next up, we've got here a report by Goldman Sachs that said hedge fund risk exposure before and after the election. As you can see, overexposed. They were quite optimistic, over-leveraged, and well, took on a bit too much risk. And I think that's why we are seeing some volatility right now. Although when you look at net leverage, that has stayed, well, stable-ish since, I would say, October or so. As for the macro job report, we've talked about that throughout the week as well. Monthly change in payrolls added around 150,000 or so. Unemployment rate 4.1%. It's up from the 4%, but still far away from the 5%. So yeah, all in all, the economy is still doing quite okay. Of course, things can change quite quickly towards the end of this year because there are quite a lot of federal employees, government employees that did take the package, right? I think it's around 75,000 of those, and they are still, let's say, employed until the fall. And then afterwards, they're probably going to be unemployed or be listed as unemployed. That could change the numbers. Now, we've talked a little bit about Tom Lee. I did a specific video about that, I think on Friday or so, basically talking about the 10 best days, right? You want to be invested. It's true that currently we started the year not great. The market is down, the portfolio is down, high growth stocks are down as well. But I mean, if you zoom out 1 year ago, we are still up quite comfortably. But anyways, he basically shows us here 23, 24, the returns. For the full year in 2023, it's up 24%. But 20 of the 24% came from the 10 best days. If you're not in the market during those 10 best days, your returns are going to look quite abysmal. More specifically, your returns will basically be 4%, about the same here for 2024. And so while it's true, it's never great to be in the market when you see your portfolio value come down. I mean, you can see my portfolio value came down as well, which makes sense if you know what positions I have in that portfolio. but I assume that a lot of us are in that same position. But on the flip side, I'm seeing a lot of deals, and that's why you're going to see that my cash position has been reduced by quite a lot. I enjoy buying great companies, good companies at prices that I feel, this is important, that I feel are okay. You might say that, oh, this company or that company is still very, very expensive, super overvalued, PE this, PE that, no go. Okay, that's fine. That's your portfolio. I'll manage my portfolio the way I want. Last thing here, from a macro perspective, China's inflation declines below zero for the first time in a year. China Consumer Price Index declined 0.7% from a year earlier, falling below zero for the first time in 13 months. The decline in inflation was attributed to seasonal distortions and deflationary pressures, with a rare negative reading for core inflation and a decline in services prices. China's economy still faces deflationary pressure, with domestic demand remaining weak, and the government is under pressure to reflate the economy with fiscal and monetary policies. So the numbers here, February CPI down 0.7% year over year versus up 0.5% in January. Core CPI fall for the first time year over year since January of 2021. PPI down 2.2% versus January down 2.3%, and most analysts have urged more policy loosening to spur demand. It's also important to note that in February, lots of holidays in China. And then for the perma bears out there, look, if we go back, right, way back, Panic of 1873, Panic of 1884, Great Depression, Black Thursday, Kennedy slide, the 73-74 crash, Black Monday, dot-com boom, Great Financial Crisis, pandemic. What can we see here? Well, what we can see here is that the S&P 500 continues to go up in the long run. So yeah. And I know what many people will say, yeah, but this time it's different, right? This time it's different. I don't think this time is going to be that different. Plus, if you invest in great companies, I think you'll do well no matter what. It's always important to have some cash on the side, right? Because if you're fully invested and then suddenly your stocks are down 20, 30, 15%, whatever, you don't have cash to add to those positions, to maybe increase that position, to take down your average. Then that's not always great. That's why it's important to always have some cash, especially when markets are close to all-time highs or at all-time highs. Now, switching back to the portfolio, nothing much has changed with regards to the rankings. So Sofi is still number one. Then we've got PayPal. Then we've got Alphabet. Alphabet in the last week has actually performed okay, all things considered. The last week it was actually, I think, up 3 to 4% or so. Alibaba number four. I mean, this one has been helping the portfolio quite a lot this year. Same with Uber. So I'm quite happy with those positions, especially since they are in the top 5. Intel, well, it's funny. 2 weeks ago, I was basically break even on Intel, and now I'm back down 16%. Micron, number 7, still there, basically break even. I'm up 1.8%. Then we've got Tesla at number 8, still up 40%. Rocket Lab, number 9, up 224%. AMD is now number 10, believe it or not, at $100. I'm still down 7% on that. D-Local down 10%. Meta, number 12 here, still up 42.34%. Might start to add a little bit more to Meta in the next couple of days if it really drops even closer to $600. Walt Disney is back to $105, so I'm down 2%. Then we've got cash, only 1.72% of the portfolio at the moment. And then we've got the, smaller positions, super small positions, closer to 1% here. That's Appcelera down 40%, Celsius down 37%, and then Owlet up 9.12%. It's basically 0.6% of the portfolio. Now, what has happened in the last couple of days? Well, I increased my Tesla position by just 10% at $259. Increased my Disney position by 20% at $104.92. Increased Intel by 7.5%, PayPal by 5.57%, Sofi by 4%, not much, but it's already the number one position there. Added a little bit more to the local, increased that by 13.75%, more Micron, more AMD, and Rocket Lab was already covered in the last episode. So with AMD, like I said, I want to increase that position to have 100 shares. I'm currently at 83 shares, so 17 more shares to go. And I think if the stock does stay at around $100, might reach that number quite quickly. Now I know, perma bears will always be bearish. They always say that the market will come down, crashing, etc., etc. Your portfolio is worthless. My portfolio is worth more and more, blah, blah, blah. I know. Especially when the market is red, all of the bears come out of their cave. I've seen that play out before. It's always the same thing. But guess what? Bears usually make not that much money. Let's be honest. No, I'm not blind. I'm not stupid, although some of you think that I am, but I'm not. I know very well that some of my companies, they're volatile. So when there are some uncertainties in the market, okay, when the market drops 1%, my portfolio will drop 2%. But when the market goes up 1%, my portfolio usually goes up 2 to 3% or so. So at least there's that. I've seen that happen last year, underperforming for the majority of the year, but then easy outperformance. Didn't really please the bears, if I'm being honest. If you go back to the comments, not that great for them to see the portfolio outperform. But oh well, as long as I make money, I'll be smiling. Anyways, couple of news related topics regarding Sofi, AMD, and Google Alphabet. For Sofi, we've got the OCC that clarifies bank authority to engage in certain cryptocurrency activities. In short, basically, Sofi Bank is now allowed to go back into the cryptocurrency business, which is quite good because, that's one of the ways to attract even more members to the platform. Quite an easy way to make some revenue as well, as we've seen with Robinhood basically last quarter. So good news. I believe there was also a tweet by Anthony Noto. It's a brand new day or something like that with some fire emojis. Maybe he's alluding to this. So yeah, let's wait and see how quickly they can turn on the crypto side of the business. Quite exciting. Moving on here to Intel. So an Intel executive, there were a couple of conferences during the week, Intel, PayPal, and AMD. So I did check already Intel and AMD. So this is from Intel specifically. They said that the recent board additions were planned before Pat Gelsinger's retirement, focusing on semiconductor expertise. Yeah, about time. Intel continues to pursue industrial policy alignment, seeking CHIPS Act funding. Well, I don't know if the CHIPS Act will stay for a long period of time. And to be honest, $56 billion for the whole semiconductor industry is nothing, right? Intel has gotten what, $8 billion, $9 billion? No, I think it was closer to $8 billion. Yet they plan on investing over the long run $100 billion. So that's 8%. Doesn't really help much. I think the tax incentives are much more important here than a CHIPS Act, because $8 billion doesn't really move the needle that much. Intel targets $15 billion in external foundry revenue by 2030, aiming to be the second largest foundry behind TSMC. $15 billion, of course, not that much, all things considered. I think it's around 10% or so market share. So, okay, it's a good start. Still second, but far behind TSMC, but I think we'll be happy. 18A is still on track. Panther Lake launch remains set for the second half of 2025. Yields for 18A are slightly ahead of Meteor Lake at the comparable stage. 18A is positioned as competitive with TSMC's N3, N2 nodes, which is what the reports have been telling us. Clearwater Forest, the service side, slipped to the first half of 2026 due to hybrid bonding challenges that have now been resolved, and the first external 18A design tape-out is set for early 2025, I would assume in the next couple of weeks. As for their AI strategy, so Intel shifted from Falcon Shore to Jaguar Shores, focusing on rack-scale solutions. So Falcon Shores are only going to be used internally. Intel sees AI opportunities across the compute continuum, including CPUs for edge inference and foundry services for GPUs and ASICs. Packaging is seen as a crucial step for gaining customer trust within the foundry business. Makes sense. Advanced packaging, that's basically why TSMC is so far ahead. As for the other businesses, so Altera Mobileye, Altera's stake sale is progressing towards an IPO by late 2025, and Mobileye is a non-core asset that will be monetized. And then as for, seeking potential strategic partners, Intel is exploring options to maximize stakeholder value, including potential foundry restructuring. We've talked about that during the live streams quite a lot. Makes sense. Moving on to AMD. A bit of the same. I'll do a specific AMD video. Yes, another one. Very exciting times, to be honest. So a bit of the same, talking about MI350, how that's, well, now for mid-2025 and now the second half of 2025, talking about MI400 for 2026, and that aims to compete with NVIDIA's Rubin. If that's true, that could be a big, big game changer. The success, of course, depends on roadmap execution, customer engagement, and leveraging ZT systems. On the other side of the business, of course, that's what I've been talking about more and more recently, because everybody's talking about the data center but forgets the other parts of the business. So server business gained market share 5 to 6 points in 2024 with Turing platforms TCO, total cost of ownership benefits. Client computing saw strong growth fueled by Ryzen 9000 desktop and Ryzen AI 300 notebooks portfolio. The embedded segment, which has been a headwind just like the gaming one, have been showing recovery signs with a strong design wins. I believe the design wins for 2024 were around $14 billion. As for gaming, that's rebounding with new GPU launches, which have been very well received by the overall market. As for the competition and ASICs, so AMD positions its GPUs as high performance, flexible, and programmable, unlike rigid ASICs. We've talked about that. I know the title of the video for Broadcom was whether or not Broadcom can destroy NVIDIA's dominance. If you actually listen to the video and not just read the title, you understand the whole thing here. So anyways, TCO, not just price, is the key factor in customer evaluation. As for ecosystem and acquisition, so open source ROCm software stack is a strategic advantage, supporting diverse frameworks and cloud providers. Software has been a drag on the business in the past, right? It could not really compete with CUDA. I think 2025, we're going to see a huge change. As for ZT Systems acquisition, that enhances rack and cluster level design capabilities for large-scale AI deployments, which is probably why NVIDIA is so far ahead or was so far ahead. ZT System will allow AMD to basically introduce tailored system designs. Moving on to Google Alphabet, we've got some interesting information regarding search. So they said the following. On search, rich and multimodal experiences like AI overviews, circle to search, and lens give people new ways to express exactly what they want more naturally than ever before. We already see more than 5 trillion searches on Google annually. And with AI, we'll continue to expand the types of questions that people can ask. This means more opportunities for you to connect with consumers through entirely new kinds of questions. For example, with the launch of AI overviews, the volume of commercial queries has increased. So the fear here of, all the chatbots, the Perplexities, Grok, ChatGPT, even Gemini, although Gemini is integrated in search, that might eat into, Google search dominance, which I'm sure it is. I'm sure it's taking some minutes away from people searching or from some search queries. But the fact that they're still seeing here 5 trillion searches on Google annually, which I think is much bigger than what they saw a couple of years ago. They also see here an increase thanks to AI overview for commercial queries. So yeah, don't sleep on that. I'll also make a specific video on Google in the next couple of days. And so overall, to conclude, while of course I don't like to see my portfolio down 5.6% year to date, we're still in March, so still a long way to go this year. Plus, I always zoom out and I see that I'm still up 50.6% compared to the S&P 500, which was not even up, 20% or so in the same period. So I'm still doing quite well. I still think that my portfolio will outperform the market for many years ahead. There will be some changes, yes, and I will be wrong in the short run, maybe in the long run on a couple of things here as well, but that's fine. That's investing. As long as my winners win much more than the losers, I will be fine. And you don't have to agree with everything that I say. You don't have to agree with the positions that I have in my portfolio with me or with anybody else. It doesn't really matter because it's my portfolio, it's my money. If you don't like those companies, don't buy them. It's very simple. Only buy companies that you want to have in your portfolio or short them, right? If you want to short, if you're really that hateful towards a specific company, short it and see what happens. I don't advise you to do that, but whatever floats your boat. Anyways, that's all I've got for you right now. Of course, do share your thoughts down in the comment section below. Are we all going to be millionaires in the next couple of days? Probably not, if we're being honest. So Apologies for that. Anyways, that's all I've got for you right now. Like, subscribe, do all of that, and I'll see you all in the next one. Bye bye.